This is the Friday, September 9th, 2016 version of the Market at Plus segment. Joining us now is Ted Seifried. Ted, welcome back.
Hey, thanks for having me, Mike.
Hey, we are glad to have you. We were so excited talking corn and beans and wheat on the program. We did not get to discuss the cotton market.
Right.
A little bit of a bounce this week.
A little bit of a bounce.
Where's cotton moving?
I'd like to say, as we said during the normal program, 1 week higher does not a bottom make necessarily. So we'll see. I mean, to some extent, you know, we get oversold, and technically speaking, we need to see bounce off of psychological and technical support. At the moment, I think that's kind of where we were in cotton. But I think it does help that grains as a whole had some strength here today, and maybe spill over a little bit there. But for the moment, I think you still have to be cautious with the idea of higher cotton prices. I think we really need to see much stronger exports before we get really too excited. Similar to what we were talking about in hogs, we need a new demand input, whether it's domestic or abroad. That demand increase would change things dramatically. But for right now, you know, I take it with a grain of salt. You gotta say you like what we saw here today, and it does breed a little bit of optimism. But I'd be careful about that.
You're not willing to take a strong position today on either lean hogs or cotton from a speculative perspective.
I think the hogs are an interesting case. And I think it's because what we were talking about there at the tail end of the show on the Chinese perspective. Because again, you know, I'm seeing sort of signs that this might be a market that they've targeted, that they want to play some games with. With all the flooding that they had over in China, it's really difficult to get, you know, accurate facts out of China because, you know, they're very protective of things like that. But some estimates are ridiculous as far as what they may have lost. So that's where the big surprise came from when we saw a few cancellations come through. But again, you know, we've seen this in the past where they do things like that to try to move prices lower so that they can come in the big way and really add to significant ownership. And I wonder if we're standing on the precipice of that.
Okay.
I also like that hogs have been carving out this sort of congestion area, which could be a bottoming formation, could also be midway congestion. So I'd be careful about it. But from a speculative perspective, I like the idea of ownership of hogs here with a stop below previous lows, or the lows that we've had just from the last month. I think it's an interesting play. I kind of like it.
It is, and when I look at the hog market, what's fascinating about the chart to me today is it's almost a traced paper image of the chart from the tail end of last October through January.
Yeah.
Huge bottom, or huge move to the downside, right. And then we just stair-stepped that puppy right on up to $90 on the nearby. And
absolutely.
No guarantee, obviously, that's going to happen
No,
again.
but you're right. It is a very similar looking chart.
It's
and
interesting.
And with that Chinese fundamental backdrop, potentially, I mean, who knows?
Right, yeah.
I mean, that's why it's speculation. At this point,
Yes.
we're speculating that that might be the case. But with that sort of backdrop, it could be a very interesting and lucrative speculative play, potentially.
All right.
But again, I'd keep a tight stop on it because if you take out those lows, you might be in for another leg lower.
Okay.
And that could happen if the Chinese business never really develops.
Right, and this production continues to grow as expected.
Absolutely.
Well, now I want to get to some of our questions here from our Facebook and Twitter followers. Flinton in Zumrota, Minnesota is asking, if this year's corn crop falls short of expectations, how much will D17 corn rise to buy acres, or will traders just be anticipating another record crop next year?
Yeah, I think the acreage, I think it's way too early to think that D17 corn is going to go and try to buy acres right here, right now. We got to get through this harvest first and see where we're at. We also want to take a pretty good look at what's going on in the South American growing season before we really get full into our acreage intentions. But that being said, I think we have the potential for a very interesting battle on the board at some point between corn and soybeans. I think I know we've been building demand in both by having lower prices, but you look at soybean demand is kind of increasing exponentially over the past 5 years. Soybean prices very well in the relatively near future, once we get through harvest, could be really asking for that acreage and giving us a very good incentive. But corn might not be willing to give it up, especially if we do end up somewhere in the low 170s or upper 160s for a national average yield, because I don't think that cuts it for the amount of demand that we have.
Okay.
So this could be a potentially interesting acreage battle. I mean, certainly soybeans are going to want to have something to do with that, but I don't think corn's going to want to give it up that easily either. Wheat is once again the potential loser here, but how much more wheat acreage are we going to really lose in this country I think that really there's more work that needs to be done globally as far as cutting wheat acreage out. But wheat's certainly not a compelling argument for gaining acreage here. No. It's going to be a nice battle between the row crops.
All right. Speaking of an acreage battle, South Trader in Nashville, Tennessee wants to know, do we plant 92 or 95 million acres of corn next year?
Yeah, that's a great question. And I think a lot of that's going to have to do with where beans are trading, and a lot of that's going to have to do with what's going to happen in the first half of the South American growing season. I think there's a compelling argument for more beans next year. So at the moment, I lean a lot closer to 92 million acres of corn versus 95. Because again, you look at that bean story, we're increasing production almost as fast as we can, arguably, over the past 3 years. And that production number is, the last 3 years have been the best 3 years we've ever done on a global scale for soybeans. Yeah, global ending stocks are coming down. Our current projection on a record crop, potentially, or estimated by the USDA, is for only a 330 million bushel carryover. We'll see more about that on Monday, but a 330 million bushel carryover after a record crop, that's not a whole lot considering the demand that we've had recently. 5 years ago, 10 years ago, 330 million bushels was a big carryover. Nowadays, I'd almost say we got to call 330, well, let's say 240 million bushels is about pipeline. And it wouldn't take much of a production issue somewhere, South America or here, to chew through that very, very, very quickly. So I think there is a compelling argument for the need for more bean acreage down the road. But again, farmers do like to plant corn, and I'm not so sure we need to give up that many corn acres. So there's going to be an interesting fight. But at the moment, again, I lean towards closer to the 92 million.
Okay, and now I'm going to jump around here on our question list. I want to jump down to Tom in Letts, Iowa. He's asking, does a 169 yield move futures to, and he throws out 370 as a potential?
I think there's a very good chance you're going to see 370 corn, whether we're 169 or 172, but somewhere in that range.
When?
You look at 2014, which, that was the year where we set record yields and we had a very big corn crop. Although it wasn't quite as big as what we were expecting. Another year where FC Stone was throwing out some very big, large numbers, and we ended up falling short of that. But at some point at the end of August and September, we were really, market, I think, was factoring in something much bigger, much closer to 166, or 176, 177.
Okay.
And we ended up at a 171. I think this is a very similar situation. You've got funds short here as well. It could happen. It could be happening now, but I'm a little skeptical of that. But October 1st through December 31st is when we did it in 14. Mm-hmm. I'm looking at 14 as a roadmap for this year. I see a lot of similarities there, so could be in that same time frame. If not then, I think you look for that summer or that spring bounce like we saw
last 2 years.
The last few years, yeah. That might be your second shot at it.
And Angie Setzer, when she was on the program, however long ago that was, she talked about how that's an interesting time, that Thanksgiving to Christmas time, to see basis tighten too, out in the Corn Belt. So might be I was going to say might be a double whammy, or would you anticipate basis weakness if we're having that futures rally?
Well, it's look at 14. That basis did falter in a lot of areas that were flush with corn. That's going to be a very localized issue, though. Some areas that haven't had quite as good of a crop as what they were expecting, you can think that maybe that basis will stay tighter if we get that rally.
Okay.
But yeah, basis historically strengthens during that period of time because we've passed that big push of sales, and then we start locking up bins.
We just loaded the bins. We're not going to unload them.
Exactly right. Yeah. And also, but I mean, tax purposes and things like that too. So. It'd be great to get both. I think there might be a little bit of a stretch, but we'll see what happens.
Now, we've got a question here from John at 4720. John, he wants to know what's your best guess with canola prices as you look out to 17?
Yeah, I'm friendly on soybean and even soybean oil prices. So I like the prospects of canola as well as a substitute. For a lot of reasons we've talked about, I feel like at some point, we're going to have to add in, and it might have to wait till after the U.S. harvest, but I feel like at some point we're going to have to add in a South American weather premium for soybeans because really there's no room for error again this year. If you look at a 330 million bushel soybean carryover.
And are you anticipating a big acreage increase in South American beans, or are they kind of tapped out on acreage opportunity?
I think you're going to see, once again, more acreage. You know, but the talk recently has been about more corn acreage, and we'll see if that actually comes to fruition or not.
Okay.
Because you know, you wonder about what the lending situation is going to be.
Yeah. Rates are very high.
Yes.
It sounds like if you're at a private lender.
Right. So I don't know. Well, the other thing too is that input costs for them is all priced in American dollars, and versus our their real and peso versus our U.S. dollar, it's making inputs very, very expensive for them.
Yeah.
So
beans make a little more sense.
It did well, but we made that argument here in the United States last year, and what did we get? I mean, we got a lot more than expected corn acres. So.
You know, you're talking about interest rates. We have one final question before we let you go. This one's from former farm boy in central Iowa. He wants to know, will the U.S. dollar remain strong if there is no Fed interest rate increase this year? And then his follow-up is there a possibility of negative rates in the U.S.?
Yeah, I don't see negative rates in the U.S. I mean, anything's possible. You could say that, at least as far as I know, I think that's something that we can technically do. But I think that's a very last-ditch effort in the Fed's war chest. I don't see that happening. I really don't see that happening. I do think we do get a little bit more aggressive on rates, but to answer his question, if we don't start raising rates fairly soon, you think that the dollar should come under pressure. However, how much pressure? Because you look at what's going on elsewhere in the world, and you still don't see that move away from stimulus and towards retraction. So I think the bigger thing that would put a lot of pressure on the dollar is if somebody else started raising rates and we didn't.
Okay.
I don't know if we'll see that, though.
Because right now, even if we're not raising rates, we're at least not going negative, which is what the rest of the world seems to be moving to.
Right. Yeah. But I'll say this. I think even if we do raise rates a quarter of a point, you've got the dollar at a very elevated level. And I wouldn't be surprised to see a bigger pullback. You look at the chart and you look at what we've done in the last week or so. It seems to me that the dollar is getting impatient to see these rates moved higher. What might have to happen is a break in the dollar to stimulate the Fed to move forward with their rate hike.
Okay. Now, we do have one final question. I'd lied to you before. We've got this question.
Fair enough.
We want you to give us a definition of a commonly used phrase in the commodity markets, and we want you to tell us, what is a bull-call spread?
Oh, yeah, okay. So bull-call spread.
Maybe use soybeans as an example.
Yeah, I think that's a wonderful example. So a bull-call spread is when you are buying a call or owning a call at a certain strike price, and we'll use soybeans as an example. I think a $10.50 July soybean call is a very attractive call in my book. And then selling a call further away from the money. So let's call it an $11.50 soybean call. What happens there is if the market rallies, the call that you own gains value faster than the call that you're short. A lot of people worry about selling that higher call because we've been taught not to sell options. But there's no way we can get to 11.50 soybeans without going through 10.50 first. So that call that you're sold, you're covered on. What it does mean is that you're making a bullish play on the market you've defined your risk for what you're paying on that call spread. The only potential downside to it is that if soybeans were to go to $16, you're only going to get the difference of that dollar between 10.50 and 11.50. So you're limiting your potential by selling that higher call.
Limited risk, limited opportunity.
Yes, but what you are doing is that, especially the further out you go in time, and the more time value that's involved, you're offsetting time value with time value. So yes, you're paying time value on the call that you're buying, but you can also sell time value and offset part of that
with that farther out of the money
by selling that farther out call. So it's a position that you put on, a bullish position that you put on the market, thinking the market's going to go higher, but you're trying to do it with cost in mind and trying to do it be as cost effective as possible.
The risk would be buying that 10.50 call and selling 3 11.50 calls to offset the price.
Yeah, ratio spread or what I like to call an explosion spread. Gosh, in 12 I saw a lot of people get in trouble with that.
Yep.
I do not like to do that. I'm not a big fan of that.
A 1-to-1.
Yeah, 1-to-1 is how I stick, especially in the soybean market, because that is the market that at any given time can really take off and leave people in the dust. And
We
that
saw it
can be
earlier
dangerous.
this summer.
Yep, absolutely. So
right.
I don't like those ratio spreads for soybeans. There are a few occasions where that might be applicable to some other markets. I rarely ever would look at that in the soybeans.
All right. Well, Ted Seifried, thank you so much for joining us this week.
Always a pleasure. Thanks for having me.
Thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and we will continue to get expert analysis right to you. Thanks for watching, and have a great week.